Hi, this is Zak Mir, editor of Spreadbet Magazine, with a look at some bulletin board hero stocks on Tuesday, December the 2nd. Starting off with Concha, where we're in the aftermath of last week's bear trap rebound from below 4 pence. In fact, the shares went down to 2.8 pence at the lowest. That was still above the 200-day moving average at 2.27 pence, and that can be regarded as a positive signal in its own right when you do see a reversal above the 200-day line. Since then, we've seen consolidation at or just below the 50-day moving average at 5.04 pence, and that may be regarded as a positive as well, given the way that the 50-day moving average has been there for support for several months here on the stock. The view now is that this consolidation could continue for quite a while, but that as little as an end of day close back above the top of the second gap at 6.15 pence may be the start of, or signal the start of, a new leg to the upside, with obviously the top of this September channel at 8 pence. The initial target, aggressive traders have already been going along towards the 50-day moving average level around the 5 pence mark. We also have some positive momentum provided by the latest double bounce off this RSI support line from the end of last month. Usually back above RSI 50 is a decent positive indication. We're just shy of that level at the moment. Next up is Fitbug, where we've got the aftermath of quite a severe pullback from November resistance up to 25 pence. The 20-day moving average has been basically the support over the last few sessions, as has been the floor of an October rising trend channel towards 10.4 pence. That's an end of day close stop loss on the buy argument at the moment. If you're cautious on the shares, maybe wait for an end of day close above the 10-day moving average at 14.2 pence, and that would take the shares back up for a partial or even full retest of the best levels towards 25 pence plus. RSI profile quite decent in the sense that we bounced off neutral 50 and then we're starting to go up again, so that is also adding to the overall feel here, which is positive. Goldplat is the next stock here. Obviously we had a bit of a bump up to the upside for gold itself to start the week, something of a surprise possibly. Here we've got an extended consolidation along the floor of a falling trend channel from the beginning of the year towards the 3 pence mark. Stop loss on the buy argument, if you're looking for recovery here, is the 20-day moving average at 3.35 pence. That would take you back up to the 4 pence plus area of the 200-day moving average at 4.24 pence in the first instance, backed by bullish divergence in the RSI window. Best case scenario here is that we head back towards the top of this year's channel at 6 pence over the next 4 to 6 weeks. But obviously, if you are cautious on the shares, you probably want to wait for a break of the 200-day moving average at 4.24 pence, even though that gives away some of the initial upside. Finishing off with another stock which could be a beneficiary of a better gold price, and that's Sovereign Mines of Africa. Here we're seeing what is essentially a gap fill after the October gap to the the September gap to the upside and the spike there. So we fill the gap down towards the 0.5 pence zone, bounced off that zone twice now. And what we're looking for here now really is an end of day close above the 50-day moving average at 0.71 pence as a buy trigger. That would take the shares back up to an assumed target at the 200-day moving average level of 1.04 pence, especially as we've had also a double bounce off this RSI support area towards the 40 level. So 50-day moving average trigger there, 0.71 pence. Best case scenario here at the moment over the next 2 to 3 months would be a top of channel, May channel at 1.8 pence. But obviously that's a long way away, and we need to clear the 200-day moving average in a definitive way before we can pencil in such dizzy heights. Stop loss on the whole bull experience here would be a weekly close back below 0.5 pence, and given the recent history of the shares, that's probably to be enforced quite strictly. That's it from me. More updates at spreadbetmagazine.com.